Traders, Cousin Vinny coming to you from theclosingprint.com on September the 2nd, 2019. In this edition of your weekend video newsletter, we'll discuss the changes in character and the changes in market sentiment. Most of our indicators are bullish, with the exception of bonds, which can move parallel to U.S. indices and equities price action at the same time, like they did back in 2014 and 2016. The markets were all higher last week. Nikkei and the Hang Seng were a bit lower, though we did see quite a few Chinese stocks moving higher to end the week. Put-call ratio is mixed. We have the US dollar at 3-year highs, the yen's bullish at its range highs, and the British pound US dollar is in a bearish trend with the FTSE flagging at highs. The gold SPY ratio did move lower last week. It erased its previous week's gains, though many of the gold stocks still look very bullish. Gold is in a fade at the present time in a bullish trend. Copper faded a bit. We need to see copper moving higher if we're looking for this leading economic indicator to get bullish for the economy. And we had West Texas crude 15 weeks below its 20-week, a little bit higher last week. The heat map is improving for both the S&P sectors and the international markets. We'll look at some IBD 50 names, in addition to some MarketSmith relative strength names that showed up on the scans this weekend. And finally, we have Bulkowski with 505 green with a CPI signal mixed green since August 30th at 76%. That's bullish with 6 bearish patterns, 19 bullish patterns, and 318 patterns waiting for a breakout. The numbers in parentheses are the previous week's stats, which gives you an idea of the change in character. Bottom line, the markets are more bullish, but we do have these tariffs which continue to be a veil over price action in the short term. The Spider weekly chart shows RSI is back above 50. We have this sinuous pattern, highs to low, or an ascending channel. 2 7% or greater pullbacks recently, trying to push back above these pivots with MACD below its signal line. We need momentum to return to the bulls. We did have 4 weeks of above average volume, as traders seemed a bit reticent to enter new positions into the last week of August. SPY Daily shows RSI trying to get above 50 as well. Maintaining that level is crucial if we're to break above these pivots at 294.15, where we stalled on Friday. We have the 9 EMA trying to turn back up through the 21 EMA. Price action was fairly bullish last week, though volume was a bit lower due to August seasonality. And as you can see with ADX, the darker line here showing that the strength of the trend has dissipated in this recent move, as price action basically has been chopping around in a range between 282 and 294. So a 12-point range that needs to be taken out in the short term if you're bullish. In addition to the change in character lately, we also see that Rinko has given us white bricks, which tells us this sinuous pattern is neither bullish nor bearish. We could actually move in either direction. A move to the upside and a break above that 294.15 zone would give us another white brick and would confirm the bullish trend as we proceed into the most bullish months of the year. As we can see in the monthly charting of the spiders going back 10 years, September, October into November, typically some of the strongest months out of the trading year, and then of course February, March, and April. So we'll look for a repeat into this year as fund managers return to beat the market averages and look forward to year-end bonuses. With that in mind, we'll also be looking for seasonality to return to the NASDAQ 100. We all remember July, best month of the year, followed by October and November, and also February. So we'll look for the seasonality to repeat as we watch for NASDAQ to follow through as well. RSI on the weekly time frame is above 50, rising. We have potential to move back up to overbought territory if price action can get through these levels at 77.78 this week. As we look for shorter time frames to confirm, we do have a series of higher lows and higher highs. Tick cumulative is starting a bullish trend. In addition, we had Russell 2000 small caps hold this level that was absolutely necessary if we wanted to be bullish going into the fall. RSI did turn up, but it is below 50. The Russell was up 2.34% on the week. So there is some progress, but this risk on indicator needs to break above these resistance levels overhead, moving averages, and upper trend line, and push through 160 if we're going to see any confirmation from small caps in the short term. The New York Stock Exchange new highs minus new lows indicator has been oscillating above and below the zero line, so all during the month of August, while we didn't break down, we didn't make any progress. We remain in this range that we also saw on the spiders and on the NASDAQ, while New York Stock Exchange advanced decline shows that we do have breadth improving, telling us that more stocks are participating in this current move. We can also see that very clearly on NYMO and NAMO. I'm looking at the black line here with the NYMO registering minus 80 on August the 5th. It's since moved higher, closed at 28.44 on Friday. If we see progress in this indicator as well as the New York Stock Exchange advanced decline, that would indicate more stocks are moving towards their 50-period moving average, which are telling us that we might see more bullish developments in the short term, something that we'll need to see confirmed in price action, of course. As I've repeated several weeks in a row, the more accurate way of looking at breadth is to break down the individual groups, the S&P 500, S&P Mid Cap 400, S&P Small Cap 600, and the NASDAQ 100 to give us 1,600 stocks that aren't skewed by mutual funds or ADRs like the New York Stock Exchange advanced decline is, to give us a better reading on breadth and market participation. We could see that here on the advanced decline percent. All of these have made higher highs and higher lows, leading us to believe we do have more upside potential. Once we get above plus 30%, we start to look for a little bit of exhaustion. We're not there yet, and we are trending in the right direction if you're bullish. As we look for further improvement in this 1,500 stocks that comprise the S&P 1500, last week we did get some readings on the histogram above zero line. We are in a descending channel of sorts. We're trying to create an uptrend. So we're not out of the woods yet. If you're bullish, you need to see a follow through. If you're bearish, you want to see this indicator break down and breadth start to deteriorate once again, which leads me in the direction of market sentiment. We can see by going to AAII.com, the American Association of Individual Investors, that most participants are bearish versus bullish. So this sentiment will most likely shift in the short term going into the seasonally strongest months of the year from bearish to overly bullish. Once we see overly bullish, we'll start to look for a pullback. However, until then, we need to confirm by watching put-call ratio, VIX, and other measures of fear. As we can see, the total put-call ratio closed at 125 last week, closer to the upper Bollinger Band, and an area where we normally see price action reverse. Last week we did have a couple of intraday readings at 135 or so. So we're closer to a bottom and a bullish follow through than we are at a major top, which usually occurs when sentiment gets too bullish, which you just saw in AAII. Until then, this indicator is more bullish than bearish. In addition to what we see on the index only put call ratio, which zapped way outside the upper Bollinger Band last week. As we can see here, the 270s and a big peak at that level, in addition to calls which saw 296 at the extremes, with max pain right around 291, which gives us an expected range also for this week for the September 6th weekly expiration. $6.15 gives us an expected move of 298.60 on the downside and 298.60 on the upside to start the first week of September. In addition, the Dow Composite is moving above these pivots. RSI pretty much looks like the spiders in the NASDAQ looking for follow through above the 50 level. And finally, the ARCA Institutional Index, the 75 stocks most commonly held in institutions' core portfolios, above previous pivot highs. That's a nice indication. We'd like to see Bollinger Bands open up top and bottom. They're starting to turn, which is telling us these stocks that institutions hold with a momentum crossover, confirming that the bulls are beginning to wrest control from the bears. The ratio between the 10-year and the S&P 500 bond stock ratio turned back down last week, which is bullish for equities, which is telling us equities are favored over bonds as the latter trades at parabolic highs, showing no end in sight. This bullish trend started back in October, November of last year and has since continued to rocket higher each time it pulled back to the short-term moving averages. Price action ran higher. So at the present time, we're still looking for a top, but have yet to see one in AGG, the Barclays Aggregate Bond Fund, the benchmark that all bond traders use to measure performance. The flip side, of course, is the high yield corporate debt on the weekly time frame continues to press higher and higher as traders chase yields, with the Fed potentially lowering rates in the month of September. This particular group continues to press higher. This is a risk on, risk off indicator. Bullish if it continues to push higher, and bearish if it breaks down like it did back here in late 2018. We have yet to see it lose the 20-period EMA as we build higher highs and higher lows. In addition, we have the British pound US dollar pair producing lower highs and lower lows. If this continues to push lower, look for the FTSE and the London Stock Exchange to move higher with higher highs and higher lows. Looking for a breakout on the London Stock Exchange, confirming this bullish trend is still intact. With the US dollar pressing to 3-year highs, breaking out of its 12-month range last week, printing 98.86 at the close. So if the dollar does continue higher, you wouldn't be surprised to see commodities moving lower as they're priced in US dollars. The strength in the dollar means that it requires fewer dollars to buy the same commodity. As we see with copper in a descending trend, if copper continues to move lower, that would be a bearish indication for the economy. If copper moves higher like it did back in 2009, that would be the start of a bullish cycle in economic indicators. The US dollar strength last week had a headwind effect on gold. It pulled back from its recent highs. Many of you took profits in your precious metals. We'll look for this bullish trend to remain intact. This pullback most likely will get bought. If it does at the 20 EMA, we'd be looking to get back into some gold stocks like Kirkland Lake, which does look fairly bullish. It pulled back, but it did find buyers at the 9 EMA on Friday. We also saw crude oil remaining below its 20 period moving average for the last 15 weeks, so we'd like to see that push higher. If you're bullish equities, you want to see the dollar come back in, and you want to see commodities moving a bit higher, especially crude oil, which has a positive correlation to U.S. equities. That said, for the past few weeks, we can see these wicks at the highs. We keep having sellers show up just south of the 20 period moving average, the dashed blue line. So at a minimum, we need to see these wicks taken out and the 20 period if we're thinking bullish, as energy remains the weakest sector in the S&P 500. The sector heat map continues rotating in a more bullish direction as we saw strength in staples, food and beverages. All of the sectors have changed to more yellows and lime greens, with strength showing up in retail, real estate, and the Reits, in addition to utilities. We also had the international markets improving as we start the week, while we watch for the consumer discretionary, consumer staples ratio to turn. We can see these moving averages are starting to move in a bullish direction. Each time that's happened, it's led to a follow-through from December and January through the recent peaks in May and July. Look for this to turn back up. If you're bullish, if you're bearish, you want this to roll over and start accelerating to the downside, which we don't currently see at the present time. Real estate improving, following through. Transports bouncing off of this multi-bottom. Stopped at the 200 period moving average. Biotechs holding these levels just below the 200 period. That needs to improve. Materials bouncing off of the and above the 200 period moving average, looking more bullish as MACD crosses and turns higher, volume increasing in the materials sector. The communications sector, Netflix, Disney, Comcast, etc., those are improving, trying to move above these pivots. RSI is above 50, MACD is above its signal line and rising. Energy, the laggard, this really needs to get going. It's at the 20 period moving average, needs to get above these pivots. Volume is starting to increase, MACD is turning. So we look for this to turn back up as institutions look for improvements in these sectors to enhance their bonuses towards the end of the year, buying the lows, selling the highs into the end of the year. Financials improving, trying to get above these same pivots, holding the 200 period and bouncing, volume coming in, MACD above its signal line and crossing. As we also see in the industrials, following through, moving above these pivots, MACD above its signal line and volume increasing. Technology, same thing. Though we did see a little bit of selling towards the end of the week on Friday, MACD is above its signal line and price actions try to move above these pivots and above these volume by price bands, where there is less resistance to a move higher. Consumer staples pulling back Thursday and Friday. MACD is above its signal line, however. Utilities following through, MACD above its signal line. Healthcare trying to move through these areas here. If biotech and pharmaceutical stocks start moving, that should help XLV. Watch for the healthcare providers as well, in addition to what we saw in consumer discretionary, which is following through. MACD is moving away from its signal line, suggesting momentum is starting to pick up. We did have a bearish engulfing candle on Friday. Look for that to follow through if you're bullish, or get rejected here if you're bearish. Moving above this volume by price band, there's less overhead supply to impede price action, so I'm bullish. I'd like to see follow through in the short term. Here is the IBD 50 for the week. At a minimum, we're looking for a price action to be above the 20 and the 50 period moving averages, with both of those moving averages climbing, along with price action recently testing or following through the 20 period, as we saw with Brown and Brown, BRO, pushing through the 20 period last week, following through on Thursday and Friday on above average volume. That's got a good look on this one. Baozun, while price action is below the 50-day, we're looking for a follow-through in the short term, as many of the Chinese stocks are improving over the last week. CDW, we're looking for a follow-through. This provider of hardware and software and technology services continues to push higher in something of a sideways range, so not my favorite setup, but RSI is above 50, price is above. We'll look for price action to continue to press higher. What caught our attention was the above average volume going into Thursday and Friday as we pushed above the short-term moving averages. We're also looking for stocks like Chipotle to continue their move higher. We'd like to see the 9 EMA continue to hold like it did last week. The trend is intact. RSI is above 50. Most likely will continue higher. Perhaps it pulls back a little bit. A pullback to the 20-period moving average would definitely get me a lot more interested, whereas the 9 EMA continues to hold. We'd also look for a follow-through if that should find buyers this week and look for RSI to turn up. Comcast looking good. Looks like it's going to follow through this week. The 9 EMA above the 20. Price action above these pivots that we're looking for follow through on the spiders and the NASDAQ. We see that here on the Comcast and the XLC communications sector. Look for a test of the highs. If this follows through, RSI is above 50 and volume starting to increase. Copart, one of these companies that restores automobiles that have been in flood damaged areas for insurance companies, resale. Discover Financial along with Visa. Many of these are bouncing, looking for a push through the 20-day moving average and a follow through as RSI continues to improve. Edwards Life Sciences improving, price action pushing away from the 20-day. I like a pullback to the 9 EMA, but it could follow through. RSI suggesting as much. Volume increasing. EPAM Systems looking for a follow through here as well. RSI needs to turn up along with price action. I'd like to see volume increasing here. EPRT and STOR, Store Capital. These REITs continue to perform as investors look for yields. They'll go after these stocks along with utilities. REITs performing last week again for the last few weeks as the Fed most likely will lower interest rates in the month of September. Look for these stocks to continue performing. A bit overbought now, so a little pullback to the 9 EMA first and a bounce would be an ideal entry, especially if we see volume increasing on a relative basis to start the day. HEICO, HEI, continues this bullish trend, RSI above 50, volume increasing. We've got ATR continues climbing. If you're in this one, just use the 9 EMA as a stop or the 20 period, depending on your risk tolerance. Otherwise, this one looks like it's just going to keep going. Hexel, from previous commentary, this one continues pushing higher, looking for a follow-through, volume increasing, RSI above 50 and rising, suggesting more upside potentially, with a short-term target around 86.60 ticks as this stock continues its bullish breakout. HubSpot pulled back to the 9 EMA. Buyers stepped up for the past 2 days. Look for this to follow through this week. Huya, these Chinese names seeing a lot of strength last week as well. Looking for a follow through. Do have resistance short term right north of 26.25 or so, 26.50. So if we get through that area, we could run back up to the highs very quickly near 29.50 to 30 in the short term. Jabil, we're looking for a little flag here or a pullback. The 9 EMA is about to cross up through the 20 period. RSI is above 50. Looking for strength and a follow through. Volume has been above average for the past 2 days, so with ATR rising, it suggests that we could see more upside. I would like to see a flag, however, for an entry to start the week on Tuesday and Wednesday. Lulu showing a bounce at the 20 period and the 9 EMA crossing through on a bullish follow through this week. Looking for RSI to stay above 50 and for retail to continue performing. Momo, another Chinese stock, volume, price action, through the pivots, showing relative strength, RSI following through, suggests that we could test this high this week, potentially a resistance zone. If we get through there, then look for these highs just north of this level at 40 to 41 between now and Friday. NMIH just continues trending, pulled back to the 90 MA, found buyers on Friday. Look for RSI to turn back up if price action does break above these pivots and starts moving higher. The Chinese education and tutoring stocks, TAL and EDU, look like they're a little bit overbought right now. Could come back in. A test of the 90 MA where buyers step up like we had back here last week would be a good entry as we start September. PAG Segura, test in the 20 period, looking for a follow through now. RSI remaining above 50. Like to see volume to start early in the morning on Tuesday. As we see the same thing on Paycom, buyers stepping up on the pullback. The safer entry is to look for a bullish day and then scale in. Paylocity showing us the same. Buyers stepping up in the short term, looking for follow through at the 9 EMA. Planet Fitness, a entry from last week on Monday. Profit takers showed up on Friday, looking for a bounce at the 9 EMA and a follow through with RSI rising above 50 if you're still bullish. Looks like we could see a little bit further downside. If it doesn't happen, look for a bounce on Tuesday. QE, mentioned this one last week. Banking and card services in Cyprus and in Russia. This one just continues trending. Looking for a flag. Strength persists, however. Rexford, another industrial REIT, following through. Strong as we saw with EPRT and also with STOR, Store Capital. Looking for these REITs to continue higher. Solar Edge and some of the other names like Ginkgo Solar, all of these showing relative strength. The Chinese solar names breaking a downtrend, following through on above average volume, ATR turning up. I'd be surprised if this doesn't continue higher over the next couple of days into the end of the week. And Visa, like many of the other credit card processing companies, continues to show buyers stepping up at the 9 EMA. As we follow through, looking for higher prices. RSI is above 50. You'd like to see that turn up as a function of price and a break above this pivot this week on Visa. Additional names that showed up on the MarketSmith Growth 250 showing relative strength. Ambarella following through. Designs system on a chip, semiconductor processing solutions used in cameras for security surveillance. Look at the weekly time frame. This one's a little bit extended. Look at some of the competitors in this group that have high IBD ratings for potential trades here, like Lattice Semiconductor. Looking for this to follow through on this bullish trend, or Cirrus Logic. GMS, retail and wholesale building products for residential applications. Most likely we'll continue to see hurricane damage catalysts pushing this a bit higher. Look for a flag first. I don't like chasing. Above average volume, they beat on earnings. GSX, another one of these Chinese names like EDU and TAL in the China-based online education and tutoring industry groups. Looking for a follow-through, relative strength line climbing, pushing through the breakout pivot buy zone. Looking for follow-through. Home Depot showing relative strength as the stock continues to push through its buy zone above the pivot. One of those cheap names, Impact Mortgage Holdings, provides conventional and government-insured mortgage loans and real estate services in the United States. This one looks like it's going to follow through. Jacobs Engineering, this one's looking good too. Good annual sales and earnings. Good IBD metrics. Breaking above its buy zone and pivot. Relative strength line climbing. Looks like it will continue to move higher. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. Make sure you check out the MarketSmith relative strength names that are in the opening monologue. Many of them look very good from a relative strength standpoint. RS line rising, good annual sales and earnings, and moving higher on above average volume. I'll send out the watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast. If you're in the path of the hurricane, our prayers go out to you. Otherwise, I hope everyone has a great weekend, what's left of it, for this Labor Day holiday. Take care. We'll talk to you soon.